Explore exactly what it takes to become a successful day trader and the power of consistency from the minds of the trading's elite. This is the Beyond the PDT podcast. Here are your hosts, Bryce, Tuohey, and Matthew Monaco.
Hello, everybody, and welcome to the Beyond the PDT podcast. I'm one of your hosts, Matthew Monaco, and today's guest is Bryan Lee, who has an absolutely incredible trading journey. His journey begins with Dota 2, which is a video game that he played after dropping out of college because he was worn out and was only really going to please his parents. While playing the video game, him and his team became the 8th best team in the world and ultimately won $50,000 each while playing in a Dota 2 World Championship. Since then, Dota 2 has gotten a lot bigger, but instead, Bryan decided to move his bankroll that he grew through video games into trading. Like many of us, he began with Tim Sykes' YouTube videos, and from there became a very good trader, primarily focused on short selling small cap penny stocks. Now I'm going to let Bryan introduce himself and tell his story, so let's dive right into the episode.
All right, Bryan, thank you for being on the show with us today. Now, before we get talking about your trading, can we go into your background before you started trading a little bit? I know you were pretty big into gaming. Can you kind of tell the listeners your story about that?
Yeah, so pretty much I've been playing video games ever since I was in middle school, and I was really competitive with my friends. Eventually, I just got better than them, and then I wanted to reach higher plateaus. I used to tell myself that I wanted to be a pro gamer because one of my older cousins was telling me that, like, oh, these guys are playing StarCraft and they're making money. And I was like, wow, that's really cool because that's the only thing that I really cared about in school. And then when I was in high school, I used to tell my friends I was like a pro gamer and stuff because realistically, I was playing against the best players in the world. It was just I wasn't really getting paid. And I knew that it was possible to get sponsored, but that was kind of just a pipe dream. And so I kind of coasted through school playing video games as much as possible. And then once I got into college, I just went to appease my parents. But I realized I started to get burnt out. I wasn't really feeling it. I didn't know what I wanted to achieve with my degree or what major I wanted to go for. So I decided that I wanted to actually pursue professional gaming. So I wrote them like a really long letter. I'm like a big writer, as you guys can probably tell with my blogs, but I wrote them a big letter that was really rational, just saying like, these are the steps I want to take. This is how I'm going to do it. And then pretty much I got their blessing, and then I was able to create my own team, eventually compete on the world stage for like millions of dollars in a game called Dota 2. And then from there, I just kind of lived that life, and it's pretty draining because there's a lot of traveling, and it's basically playing 24/7. And I did that for probably 4 or 5 years, and I was playing the game for over a decade by that point. So once I kind of like achieved what I wanted to achieve in the game, I decided that I wanted to work on myself, like spend more time with my family, and like find another reason, another purpose for myself. But yeah, it was very difficult to find something that was as good as gaming because like I was constantly on stage and like playing in front of like hundreds of thousands of people, and I had a lot of fans and everything like that. So thinking of transitioning back to working without a degree from school, I needed to think like what options are available to me. And trading was something that made a lot of sense to me just because like I built up a bankroll from playing the game. I just didn't have an actual means to use it. And I was always kind of like interested in stocks just because of the thing that people always tell you, like, oh, passive income, like invest your money and then, you can really make some good returns. So that's kind of where it all started for me. And I guess like my initial foray into it was just from Tim Sykes' videos on YouTube. Just like a lot of people.
So what was the game you were playing? Dota, is that what you said? Dota 2?
Dota, it's Dota. Originally, it was a mod from Warcraft 3. And then it got so popular that Valve picked it up and turned it into its own standalone game. And like their initial launch into the like gaming into Dota was they had a $1 million tournament back in like 2010, 2011, and then every year the prize pool kind of doubles, triples, and now it's at the point where the prize pool is like 25 million, and like first place, every player is making like 2 million, $3 million. It's really game changing. But sadly, when I played, like my team was top 8 in the world, and we got like 50K for 8th place, and then like if I played another year, it'd be like 500,000 for the same place.
Wow. Yeah, man, that's crazy.
Esports picked up big time.
So you discovered trading just by like looking for different ways to, use that money, that bankroll that you developed through gaming and the Tim Sykes thing. So how did you like start trading? Like, what strategies were you using off the bat? Did you find success right away? How'd it go for you?
I listened to all the things that they said where it's like, oh, you should paper trade first. I didn't really know about shorting. It seemed like the harder thing to do. So I said, okay, I'm just going to go long, but I want to paper trade. So I got the whole stocks to trade thing. I got some of the DVDs, and then I paper traded off stocks to trade. And I was like, wow, this is pretty easy. I make like $500, $1,000 every day. I could just do this consistently. But the thing that I realized was that I was getting like the perfect fills. You can buy on the bid, get filled in stocks to trade, and then like, you get your full position as well. And then like you sell in the ask, and then you've like made money over the spread. And then once I like actually start, like I would basically have a calendar, like an Excel document where I would like write, oh, okay, I made $500 today, lost like $200 today, whatever. And I did that for like almost a year. And then I was like, okay, now I'm ready. Like, I feel like I'm really consistent at this game. I went and opened an interactive brokers account. And then I started longing. I started realizing like, oh, I'm not getting filled. Oh, I'm getting all these partial positions. Oh, low float stocks, they move a lot faster. There's all these emotions. And then I was like, oh shit, I don't actually know how to trade. And and that was me like being very serious about it too, because I woke up every day in California. It's like for me, I wake up 4 a.m. every single day, and I was doing that for like a year. And I treated like a full-time thing. I was really serious about it. I used the size that I wanted to use, everything like that. And I was studying like as much as possible because I was trying to do like 8 to 12 hours a day of studying. So I thought like if I did that and I took my time, it would be consistent.
Now, when you first started trading, and you don't need to go too far into this if you don't want to, were you under PDT? Like, were you forced to taking 3-day trades a week?
No, I wasn't, because like I saw that rule and I thought that was so stupid from the get-go. Yeah. So I was like, well, it's a lot of money, but I'm gonna trade really, really small, and I'm gonna take my time.
Yeah.
But I've dipped below like plenty of times. I actually like asked my parents to help me out at times just to get above PDT. And actually, like some of the worst moments for me was when I was hovering right at PDT, and I was like, dude, I cannot lose. I cannot afford to lose right now. And then that loss just balloons because I won't accept the loss. And so like I always try to stay right above it to make sure that I'm like able to mentally handle the emotions.
Yeah, no, I was going to say, so, and after reading some of your blog posts, it seems like trading psychology and emotions has been a big part of what's made you as a trader and what's kind of at points broken you. Can you kind of go into a little bit of how as to how important emotions are in trading for you?
They're huge, because like once I did start trading a live account, I realized that emotions are like a huge part of the game. I mean, like you can make money in so many different ways, and a lot of times you can make money when you don't even really deserve to make the money. Like if I long a low float stock and like someone's pumping it, I could make like an easy grand or something like that. But I found out it's not really consistent. But when it comes to the emotions of it, like I realized that like there's so many huge profit and loss swings, and I was looking at the unrealized gains a lot, like a lot of people do. I realized that if I want to be consistent, I need to hide that number. I also need to like accept the losses, but it never really made a lot of sense to me until I learned the concept of risk reward, because like, once risk reward like was explained to me, where say you have a 3-to-1 risk reward ratio as a short seller, it made so much more sense, because I could afford to lose twice, and then if I win once, like that covers everything, and I'm profitable. Uh, I had a really hard time when it was more like 1-to-1 or 2-to-1 because like that one loss, you're like, oh, now I have to make that loss back. How can I accept that loss? But with 3-to-1, it's a lot better, especially with like locate fees and the ECN fees and commissions. They don't really tell you about that when you start trading. I just like
Yeah.
there's so much on top of it. But for long, like 2-to-1 is okay for me.
So, building off that risk reward, were there, especially kind of when you first started, maybe beginning to see consistency, were there specific setups that you were looking for every trade to make sure you were getting that 3-to-1 risk reward?
So I had no concept of risk reward when I was playing long, and I was long for like probably 3/4 of a year. So like when I look back at paper trading, and once I opened my live account, I was like, wow, paper trading was completely useless. I feel like I had to start from the rock bottom again. And then once I went live with longing, it was more about just like scalping the moves because I was buying a lot of those breakouts. Like the tape starts accelerating, you buy the breakout, and then it comes right back down. Then I have to sell immediately. Sometimes I would get lucky and it would just skip. And so like I thought, well, if I buy the high day, I need to like scalp that move really quickly. And I was really drawn to people like Madass because he's like, oh, I don't do the fundamentals. I do some technicals, but it's mostly like getting the quick money, not exposing yourself to risk and like having a higher win rate. And I was like, okay, I'm just gonna have hotkeys and do this really quickly. I'm a gamer. I know how to like do things quickly. That kind of worked out a little bit, but like the problem with that for me was there was no plan at high day. Like it could fall so quickly and then you're completely screwed. So like I had a really hard time going long. I was basically hemorrhaging money, but slowly enough to the point where like I felt that some days there were some bright spots. I had really no concept of risk reward until I started short selling actually. And that was kind of like there was just a moment. I think a lot of people have this moment where they're like, every single time I buy the high day breakout, it just falls back down. If I just went short where I bought, I'd probably be in a lot better position because I always lose. So
That's what you started to do. Yeah. So are you primarily short bias right now then?
yeah, I'm trying to work on my long setups, but like my longs are really only when my shorts look terrible, and like that's like when there's really low float, high institutional ownership, or what I would consider like my price target's kind of already too close to it or basically reached. Like sometimes you'll see in the pre-market like a ticker like today GLG, it spiked up, it came down, and then like that's where I would have taken profits if I had shorted the spike. So I'm like, well, I can't touch this play anymore. And then on top of it being like very low float, that's a setup that I would long, but like probably 95% of the time I'm just shorting.
Now, are you shorting mainly low float stocks, or I mean, what other, or is that kind of no? What do you, or do you play bigger name stocks?
I short basically every small cap. I like to keep it under $10 because I find that those stocks generally have really poor fundamentals, and there's a reason for them to come down. Like there's bag holders, there's dilution, or they're just very sketchy in general. And like there was a point in time where I noticed that every stock on scan would just fade. Like there was not even a point where you could buy it or like anything like that. So I was just like, well, I'm gonna short it and I'm just gonna pick like a nice risk. I like what I did was I just screenshotted every single day, every single gapper, and then I kind of like I'm not much of a statistics guy because a lot of people in trading they like saying to track statistics. I'm more of a visual learner. So by screenshotting everything and kind of reviewing every day, I'm like, well, this is kind of like the range. Like a lot of times they fall like 20%, 30% when they're gapping up that high. And so I was like, well, I'm going to try to short at the top and then like cover by end of day. So like a lot of people knew me for being really patient. I would basically like hold any stock until like the very last minute. And I would usually get the very bottom of the move. So it was really nice for a while, and kind of the patterns changed recently.
And why do you think that is? Why do you think like short selling isn't as easy as it once was?
I think it's very crowded. Like a lot of the people who were successful at shorting were educating people like Dux or Gurtani, and there's also more chat rooms. Like I'm not going to say that MIC is a bad thing, but MIC brought a lot of new short sellers. I mean, they're pretty short biased community in general, and like whenever a pattern gets more crowded, especially with people who are like learning the game, and such a dangerous with shorting, it's so dangerous. Uh, you know, I've seen things like people are shorting like the low a day, or they're shorting the consolidations way off any resistance levels, and of course they're going to get squeezed, and then that squeeze can kind of like balloon, especially when there's that many more people in the patterns with those like more eyes on the play. So like now kind of volume is really one of the big indicators I look for, because if there's a lot of volume, basically anything can happen, and that's what the manipulators need. They need that fuel to like drive the prices up. They need like the stops to keep getting hit, people to like spike over the resistance level. Maybe they didn't get their stop set in, or maybe they have a market order out, and then like they're too stubborn, their emotions come into play. They're holding the stock, and then they're hoping for it to come back down because all penny stocks are trash, basically. And then they start averaging down, adding to losers over and over again. And then they just have these big blowups where like there's a margin call coming through, and then it just has like a chain reaction. So it's kind of like that. Those kind of situations are bad. And then like kind of on the flip side, like I thought, oh, if the high volume stocks are the ones that get manipulated super hard, like I'm just gonna go for the low volume stocks. But then when there's too little volume, there's not enough liquidity, and then they can do the same exact thing. They can skip the stock, and then the people see it on their scans, and then just like spikes really hard. So there's kind of like a balance, and I always look for like a certain amount of volume, like at least over 50K or 100K. 50K is like the very minimum that I'll trade on any like pre-market gapper, because below that, like I've shorted like at perfect positions, and then it just like ramps up. So it's really dangerous.
So is the crowded short selling, sided trading, is that what's kind of motivating you to go long more, or are you just you're confident with your short selling, you're just looking to expand your trading strategies?
I've always liked the idea of long, just because once I learned risk reward, I was like, shorts have so much to deal with. They have low K fees, they have to pay up front, and there is an emotional side to that, because when you locate a certain amount of like stock, you're like, well, I want to use this, and it becomes dangerous, because there's been many times where like ideally, as a short seller, the higher the stock goes, the less shares you want to use that you initially located, because there's more risk, like especially when they go very parabolic. They're in a totally different price range when it comes from like $2 to $5, and so the spread is moving a lot quicker. But I'm like, oh, I have such and such shares, I want to use all of them, so like I'll put all of my shares in at the tops, but my risk will be too tight, and then I'll just get stopped out anyway. So like it's not a good thing. But yeah, crowded shorts and longing, it's more about like seeing how the patterns have evolved from I guess really like the end of last year. There's been a lot more squeezing, a lot more of these like 300% runners is pretty common, and I wasn't really used to that as a short seller, because I was only short selling for about a year at that point. So I'm thinking like there's so much more money to be made on the long side if you can just capture a piece of it, and I kind of treat it like, oh, there's no locate fee, so it's like a free trade for me.
Yeah, Matt and I were talking about that just the other day, about how locate fees can really either cause a lot of FOMO if you've got all these locates and you're like, well, I want to use them obviously, but there might not be a good time to use them. So definitely understandable that long is something you'd want to work on. Now, we've been talking a lot about kind of the stuff you look for in stocks that you're trading, but how important are fundamentals versus technicals for you when you're trading? Is there one that you rely on more?
It's a It's a mixture of both. I always subscribe to the idea that there's kind of a harmony between it, because one of my main influences on Twitter is ADF,
Yeah.
Team 3D Stocks. He's really, really big on, not discounting anything. He's pretty vocal when he hears someone say like, oh, you only technicals matter, only fundamentals matter. And he's trying to like correct that behavior. So I always like believed what he was saying because it just makes sense logically. So for me, it's about it used to be very skewed. I've gone through different phases. So there was a point when I was really, really interested in fundamentals, and that was like 80 or 90% of my trading. And it really worked out very well because dilution was not really common knowledge. At least I didn't see it much on Twitter. So people weren't shorting stocks because they saw like a shelf or a 424B. They were just like ignoring that. So I was thinking like, oh, I know they're going to dump 2 million shares. So if I go short here, this is an A plus setup. And then I would rate every stock based on like the fundamental criteria out of like 100, and then it would assign like an A grade, and like dilution would be like almost 40 or 50% of that grade. So that was a thing. But then I noticed fundamentals started getting more choppy because a lot of people are learning it. But just like in anything in trading, the more people that's looking at it, the more the patterns kind of don't work out as cleanly. And so I noticed that they would see things like, oh, there's an S3 file. I'm gonna go short now, but it's not in effect, number one, or even if it is in effect, there's no actual dilution coming out of it. So people would cause these like crazy runs based off of false fundamental knowledge. So then at that point, I realized that I need to take a step back from fundamentals. They're not as important. I just need to know the basics. Because like before I was combing through all the documents looking for the warrants and the dilution and everything like this. But now it's really not worth the time, because sometimes like, if a stock trades like 4 or 5 times, 10 times, 20 times its float, they can actually just dilute into that volume and the stock can keep going up. So I was just like, you know what? I'm just going to like know that there's dilution, know that the company is kind of shoddy, but that's not like the main deciding factor these days. It's more like what are the margins of this trade, and like can I get my ideal like 3-to-1 risk reward or more. And I kind of treat trading more systematically. Like I'm willing to take more trades and like more or less than ideal setups. Like then I don't only trade like A or A plus setups, because I realize that like if I'm treating every trade as 3-to-1 and I have a high enough win rate through my statistics, like if I take every play that I feel like I have a decent edge in, eventually my equity curve will grow regardless. So I kind of treat them all the same. I'm not like the kind of person to like all in or add into winner on like A plus setups, because I don't want to be too convicted on the ticker. But I have been experimenting with it because I have some friends who are really, really good at it, like Binder on Twitter. Super, like he's an amazing trader, and I always want to learn from him. Or like Short Bear. I mean the Bear is one of my friends, but he's adding like huge size on these like tiny bounces, and he's making like the same amount of money that I could make like trading the entire range, but he's trading like just a small portion of it. But his win rate is like over 90%, so it's kind of crazy.
Wow.
So you've kind of been dropping some like breadcrumbs throughout the whole time, but like as of right now, like April 11th, 2019, like what is an A plus like criteria for you? The healthy mix of technicals and fundamentals. Like what are you looking for every morning?
I like to look for a stock that's not too low float. Sometimes the float is okay, it being low, if I know on the daily chart there's a reason for it to come down, like I think Dux calls it a bounce short. It's like there's a lot of volume traded on a certain day. You see that it spiked up, came straight back down. And so there's people backed at those levels. If it spikes up there, there's a really good chance technically they'll come down regardless of the fundamentals. A lot of times those are low float stocks, so I like that setup a lot. But my main A plus setups is when the float is like above like 4 million to under, I don't know, 15 or 20 million, something like that. And there's not a high amount of institutional ownership, like less than 20%. I like to see that they need cash. I like to see that they don't have very good revenues. And then I like to look in their filings and see if they have active shelves or not, and if they have diluted in the past, because that helps me realize that they're kind of a crappy and greedy company. But sometimes, like, when there was the huge pumps on the AWX, things like that, those tickers, they have actually pretty okay cash, and they don't really need it. And then they also don't file for dilution. So, like, when that stock picks up a lot of volume, there's no way that it's a crappy enough company for it to come straight down. I also look for technical patterns. Like, I like to see like a really nice gap percentage, but into some level of resistance on the daily. I like to see it reject off the highs and then kind of have lower highs going forward. And when I see it maintaining that trend, for me, that's kind of like a signal that this is a fader. And then, like, I guess my bread and butter would be the all-day fader strategy, where I'm trying to get it as close to high day as possible, and then bring it straight back down to fill the gap below, or like whatever technical level I'm using.
You've mentioned a bit that your strategies have kind of had to change over the past, or over the course of time that you've been trading, due to people, more people learning about fundamentals, or more people shorting. In what ways have you adapted to the market when you've really noticed that you've needed to change? Like, how do you go about adapting?
Well, I'm actually pretty poor at adapting, to be honest. Like, I like shorting towards the high day, and that can be kind of dangerous because technically you don't always know where the front side is kind of having a turn. It can do whatever it wants as long as someone's willing to push the button over high day and market order out or whatever it is to stop. So it is pretty dangerous. And I have taken a lot of cuts on that, but what I realize is that there are different market cycles, and sometimes you have to be more conservative, especially when there's like a hot sector. I think the first real drawdown that I've had, because when I first started shorting and I found my rhythm, I was on a consistent uptrend. I never had a drawdown. The first drawdown I had was in the marijuana sector, when like NBEV and IGC were going crazy, and that's because there was that forward-looking event where weed was being legalized in Canada, and it was like a month off. And I'm used to, like, I don't know, these kind of things don't really happen that often, or at least it didn't happen to me as a short seller. I know there was Bitcoin and the shippers, but like, it didn't seem as long of a period. But I kind of shorted like NBEV, IGC almost every day, and I gave back a lot of my gains, at least half of my gains over the course of a year. And that was a big realization for me as a short seller, that when there's a kind of sector momentum, you have to respect it, and you have to understand the reason why it's hot. I mean, like, it's pretty obvious. Everyone was talking about Bitcoin. It was going crazy. And until the point where Bitcoin crashed, like, all those stocks were strong and not really great shorts. Same thing with the cannabis sector. So, for me, that's when I decided to, like, with my friend, the Bear, we just created this shit list, basically. And we're like, okay, NBEV, IGC, it's not even worth it. Like, if it gaps up, don't trade it at all. And so that kind of protected me. I do get, like, tempted to trade them every once in a while. And I think NBEV ran the other day. I shorted it despite it being on my shit list. And I paid the price. But the main thing for me right now is that I take it out of my control and I put it in my broker's hands. And this is something that I really stress a lot to my friends, especially when they're having a really good streak. Because I read a lot of books. I studied a lot of, like, how am I going to control myself when a disaster scenario happens? And I realized that because we're emotional and because we're human, sometimes those emotions like fear and greed are going to play a factor, and you can also go to fight, flight, or freeze, and those are like literally the worst thing that you can do. Like you revenge trade and trying to make back what you lost, and then you just balloon that. You're afraid to take the loss, so you just wait, and then you take a much bigger loss than you want, or you get greedy and you size in too much because you were having a hot streak, and then you like lose way more than you want. So like with the broker, I realized that like if I take it out of my hands and I say, hey, on NBEV, I only want to lose like 2 R, which is like 2 losses for me because I generally take in 1 R per loss. That's just the way that I trade. That way I'm protected because like I can make back those losses in one trade and be profitable if I just live to trade another day. It's okay to take shots and miss, especially when you think you have an edge, but it's not okay to like let that balloon. And I also have a max loss on the day so that I know like you have to just walk away and stop trading, because I've told myself like, oh, I'm going to stop trading, but you see it like getting higher and higher and higher. You see it slowing down, consolidating, like something like ATAI yesterday. And then you want to just short it again, and then you lose, and then you're like, why the hell did I do that? Like I have no edge anymore, or at least it's severely diminished. Maybe it's not even your strategy. So yeah, those things are really, really important to me, just to take it out of my hands, because I think when it comes to discipline, the easiest thing to do is to have a system in place where you have literally no control, but you've determined that's okay for you. That like there's been so many days where I took the max loss that I needed on the short, and then it gets up to the level that I initially wanted, and then I can't short it and I have to watch it die. But it's a lot better for me to view it that way, and see that like, okay, I missed this one, but yesterday maybe if I tried to do the same thing, like if I wanted to reshort again, like it just keeps going. And so there's always the chance that you get emotional in the trades, and like it sucks really bad. Like I get angry. I'm like center port, this is the perfect position. I wanna short right now. Like please let me, I can make back all my losses in one trade. And I have to watch it, and I'm like, but one of my friends, he's really, really supportive. He's told me like, you have to think like a professional trader. You have to think in the long run. It's not about these individual trades. And so he always congratulates me, and I'm like, dude, I missed the whole move, man. Oh my god, like Riot the other day was like, TROV is like the market makers, they just spike it to high, they hits the stops, it spikes up for like 30 seconds, and then it just fades all day. And like those are the kind of situations that are really frustrating for me. But I know that there's been so many situations where it never comes back, and then you're just screwed. So I mean, I'm really happy and thankful for my friend to just be like, congratulations, you did not keep shorting. And I'm like, my broker did that, not me, but it's all good.
Yeah, I think that's a great tip, like a great takeaway. And I mean, honestly, I'm probably gonna call my broker tonight and do that, just because when you get in the mindset, like you're saying, you're like, you think in the moment you can make that money back, and sometimes it happens, and then that just feeds the monster within you for the next time. But that one time where you're just like, cool, like now I just doubled my loss, where if I just didn't even have the possibility to trade because the broker took it away, you'd be way better off in the long run.
Oh yeah. And like it becomes a nasty cycle too, because you have one red day, it turns maybe 3 red days, and then you're like, oh, I'm now at a deficit, I want to make all this money back. And it can kind of snowball. But like one trick that I do is, and this is I learned it from Bao. He had a really good recent video about this, how to recover from trading losses. But he more or less says the same thing every day, like whatever video you watch, because he's all about process. Is like, you just need to have that one green day to have the, like, however you're gonna get it. If you're gonna just scalp really quickly, or you're gonna wait for like the best setup, or you're just gonna say like, oh, I made like a little bit of money today, I'm just gonna shut down my platform and like move on. Like that one green day, like after a long streak of losses, is really huge for your confidence, because then you start remembering like the positive emotions, and you start being kind of like scared, and like that's what I need to remind myself a lot sooner, because like if I go on a losing streak, I might prolong that a little bit, but the first green day always gets me back in check and like on the right track. And then like another thing about it is you have to like understand that it's a game of in the long run. And I have a all-time chart of my P&L. So like even when I'm having a big drawdown, I put it into perspective, and I'm like, I'm still uptrending. This drawdown is like it's kind of natural. Like you can come to expect that when you're winning a lot, like eventually at some point you're gonna lose. And then I guess like the other thing that helps my emotions in check is that I started kind of like wiring out money over a certain threshold instead of trying to like have this massive account. And even when you have drawdowns, you're like, I already locked that in. It's in my bank account. I'm not gonna put it back in my account. So you know that whatever expenses you have for the month, they're taken care of, and then it puts your mind at peace. But even with all that, you still have to recognize like I need just to make a little money today, whatever it is, just one green day. That you go, I want to make it a green day tomorrow, and it's just like that.
So, kind of building off of what you've been talking about, well, first of all, how long did it kind of take you to start finding consistency in your trading? I guess let's start there.
Well, I paper traded for like 3/4 of a year. That I thought was consistent. It was completely worthless. Then I went long, and I had like a 40% win rate probably. So I was just bleeding money. And that went on for another 3/4 year. And then once I started shorting, it took me about a month or two really to get into it. And I started having like 70-80% win rate, and like pretty good gains as well, just taking the entire move. And I kind of just repeated that process for a long time and refined it. And so I guess it took me almost a year and a half, 2 years to like find my footing and like figure out what works for me.
And now, so as you started to kind of find consistency and start to size up, did you have any issues that came along with sizing up? Was that something that you ever had an issue with?
Oh yeah. Like the big thing is the recent blog that I put out. I talked about actually like blew up all my profits. I 300%ed my account, which was like, for me, I was really, really super cocky because I felt like now was the time that I could start pushing size and just like commit like really hard to, I don't know, making as much as like a really dream career, like a doctor or something. And yeah, I was kind of on that way. But before that, I never really felt guilty about sizing up because I'm like a firm believer in compounding. And so you could find resources online, but basically you pick a certain percentage of your account that you want to risk per trade, and then every single day when you add or subtract that P&L to your total account, like it will scale. So when I'm losing, my position size gets smaller, so I'm protecting myself. And then when I'm winning, like it's going up and up and up. So it's kind of like a game where it's like, even if it's just a couple dollars extra risk every day, you feel like it's kind of justified because you've worked up to that point. And there's been times where I've like, when I had a huge drawdown on NBV and IGC and stuff like that, I decided not to assume my original risk because I built my risk up slowly through compounding. I lost a lot, so then I was kind of back to square one. For me, it was really important. I told myself that I needed to trade that back up to where I was, because if I just started back to my, like, I don't know, let's just say I was risking like $200, right? And I went down to 100, risking 100. If I just skip back to 200 because I'm like, oh, I know I'm capable of risking that. I've done it a million times. The losses are going to hurt so much more because like now I'm losing on top of an account that's been losing, and it's like very emotionally draining. So I decided that I wanted to like work my way up, and that did help a lot because even though I felt that I knew what I was doing and I was consistent, there's still a lot that comes with having your first big drawdown emotionally. And like, I would get more scared. I would kind of like slam out quicker or like be a little more reckless. So then even from that square one point, I was still going down and down and down. But I always felt somewhat protected because I'm risking less per trade, I'm risking less per trade. And then once I started doing the thing where I was like, oh, first green day, started working back up, it actually grows rather quickly. I mean, like when I look at my all-time chart from the point where I grew my account initially, had the drawdown in NBEV and IGC, like once I started getting the ball rolling, like I parabolic over that, kind of like a chart breaking high day. Like I had a dip, parabolic huge, like more than I could imagine at that point. And that was all because I took it really slow, like just one day at a time, building up that compound from like, you know, you risk $10 more today, you risk $20 more today. And then like, I've had days where I've made like 20 Rs, 15 Rs, and you can really skip like a dramatic amount of levels. And so it kind of happened in no time back, like getting back to where I was and even more. And I felt like I deserved it because I grinded that out. I didn't like skip any steps. So really, but the problem, kind of what I was alluding to before, was the problem is that in small caps, there's kind of a limitation, especially on the strategy that I use. I like to scale in like a large position around the same area. So like I'll usually one shot it, two shot it, or like have, I don't know, 4 ads. And when you do that, like I noticed the algos, like whatever it is, the HFTs, they undercut you, they partial fill you positions, they ramp the stocks like over high day or whatever resistance, and then hit all the stops, and then like you can't get out once you have so many shares. And so I got to a point where like having built my account, compounding is so huge, like 300% of my account, like I said, I was trading like so much size, like more than all of my friends in my group. And I couldn't control it anymore. And so like once I couldn't start feeling like this massive slippage, I lost like my emotional control. And then from that point, I started breaking a lot of rules, like averaging into the winners. And keep in mind, I was already trading really large. So then at this point, it was going into like leveraged positions, and then my brokers gave me like almost 4 times my account size, and my account size 300% from where it was. So it's like getting crazy. And I was like a good enough trader to the point where I could kind of wiggle my way out of those situations. And that further fueled my gains because then I was having like way more like dramatically larger gains than I have had before. So then that was like pushing my account to the limits. And then you 2% that on the account, which is considered like pretty aggressive. I mean, like I wouldn't go over 2%. Some people are crazier, but like 1% is pretty good for compounding. 2% is pretty aggressive. It grows so fast. Like I'm like skipping hundreds of dollars on my risk, and like eventually it caught up to me, and I kind of like couldn't let it go when it was like a large amount, and then but it was acceptable, and then like it got larger and larger and larger, and then I got margin called, bought out at the exact top of the stickers, and then I have to watch it fade all day, like having like the most massive loss my entire career. And like at that point it was just kind of, I don't know, because I got a lot of like congratulations and pats on the backs from my friends and like from Twitter and things like that, where I was like, I'm just building my account so much and I want to have this huge account, and I saw myself like having a huge like bankroll and like making lots of money every day. And it was kind of like a high score that I wanted to achieve. I wanted to be a really great trader. And I didn't realize all these limitations. Like there was a like, oh shit moment when I could have worked my way out of a position, but I didn't even know that at my broker there's a max share size. And I hit that share size and it would not execute me at like the best price, where I would have like made a ton of money on the way down. And now I had to like suck that in. And then they like started sending me emails. They were like, dude, you have to watch your position. And I'm like, okay. And then I started feeling like this huge chills, and I couldn't move. And I was like, what should I do? Should I call them? And I started like messaging them back and forth, like, don't market me out, don't market me out. I'm gonna put more money back into this account so I can like hold this position, because I knew at that point like it was going to work. Like it wasn't just a feeling. Like I knew at that point, like based on everything that I've learned like over the years, that this was the turning point, and I was about to get stopped out right here. And then like while I'm in like this a huge adrenaline mode, like I start hearing like order filled, order filled, order filled. They're marketing me in like at the worst prices. I'm seeing like the P&L I'm unrealized, and I'm like, holy fuck. And then like I just couldn't like handle it. And so like at a point I had to pull the trigger myself and like push like market all out, like liquidate the entire thing. And then that at that point like it just straight up reverses and like it fades all the way back down. And I was like, what the hell did I get myself into? And that was like a huge like shock. And I guess like I was kind of really emotionally in a weird spot, because like at the around that time, like in October, my dad passed away like very suddenly. And I thought like, oh, I'm not gonna let this affect me. I'm gonna like keep trading the way I do, because I was really consistent and I was doing really well. And I'm like, I can keep doing this if I keep my emotions in check. And then like I kept growing, and I was like, oh, this is great, because this is what I wanted. Like I wanted to keep on the same track, the same path. Like I didn't want to have like this huge thing where like I have a drawdown. And then so like I got really confident that I was able to push through that, like career wise. And then so like it built up like all these emotions in me. And then I stopped like being able to accept losses. But basically at the end of it, I realized like things had to change. Like there was more responsibilities, I guess. Like before I didn't really think about the money, because I always feel like at the end of the day, like my parents like can always help me out, or at least I don't have to pay like rent or buy any of my own food or whatever. And that was really nice because I could focus fully. But then now all of a sudden like money became a big deal, and I'm thinking about like this, like, oh my God, how much money did I lose here? Like, how is this even recoverable? And then like now having to think about all that, like I couldn't handle it. And I guess it was like kind of the worst like mix of emotions possible for me. And then I realized like what I need to learn from this situation is like, number one, you have to trade like a reasonable liquidity range. Like you can't just short like a ton of size like ducks and like expect to be safe unless you're like extremely disciplined picking the best setups. And then also I realized you have to just wire out. Like you need to take the money, because I didn't take any money out of my account like from that entire time, and I lost all the profits. So like that was a huge blow to me emotionally. And then I had to learn like it's just a whole new set of rules like for myself. But knowing now like that I could have just saved myself by telling my broker like, hey, shut me down, or like don't let me add to this position. Like even having like a huge drawdown on a large equity parabolic move, like it's not really a big deal. Like I would just keep trading the next day, and then it's nothing,
Yeah, absolutely. And it sounds like you had a lot of people that were kind of helping you through. Like you had friends that you were saying that traded with you that helped you through this. Have they been your friends that you've been mentioning? Have you learned it all from them? Different ways to manage your emotions and stuff like that when you are having down days.
Oh yeah, definitely. Like I like to talk to my friends and ask them, like I kept shorting this. I couldn't control myself. Like, why am I doing this? How can I like reconcile that? Or even just like profit targets. Like, why am I not waiting to my profit target? And they're telling me like, sometimes I'm just being really greedy. Sometimes I'm just afraid. Like, I need to just work on thinking like a professional. Like there were a lot of times where I would get like the perfect short. I would have the intent to take it like at my profit target, which is like 3R, and then like I see that it can go maybe 4 or 5R, so I like kind of hold it, and it'll spike to high day, break high of day, and then like all that profit was nothing because like I was really big into my system. So like I really the way my system works is that I assume every trade's 3-to-1. I either get out of my stop or my profit target, and there's no in between. So I'm not really like scaling out to the washes or anything like that. And so like by not appreciating really the fact that I'm able to even make 3R to begin with and like going for those greedier plays, I was opening myself up to more risk because like the reason why I have that price target to begin with is like because I know it's achievable. And so I started doing things like scaling out 1/2 at my 3R and then like letting the rest run, things like that. But really like a professional would just think, I take my profit target and then I move on to the next trade. It's not that important. It's not going to change your life, just one trade, at least not with my system.
So we're going to start wrapping this up here. But if there's one thing that you could just tell new traders or recommend to them if they're like starting out with a small account and they're just starting to get into trading, what would that be?
One thing, huh?
I guess, you could do multiple. Do multiple. Give it like, your top 3 maybe.
Okay. First, you need to understand risk reward. On long, I would say 2-to-1 at least. You can assume more risk on longs because you're not paying locate fees, and so there's not this extra like added pressure on your account. I think longs are probably easier to learn and to get a large like gain on because like there are some setups for me that are like very obvious longs, like when the float's very low, the volume's very high, and like there's certain like indicators that I use that like I feel like it can't really, the chances of it going lower are much, there's very low chances it goes lower, like things like that. But actually it's kind of weird because like I never truly understood the long side until I went short, which is because you learn the mentality of them, like, and then you learn like, oh, shorts don't want it to squeeze over their stops, and so like that's where your money comes from long, like when it gets crowded, things like that. But yeah, risk reward's huge. You have to be able to assume the risk because like if you don't understand risk reward, then like you make $500 here, then you lose $500. You make $500, you lose $500. You're not going to go anywhere. You have to be like, okay, I make 3 times as much when I win. So if I trade like that, then I'm profitable even with sub 50% win rate. So all of a sudden you can say like, okay, this is a loss that didn't work out. But I never really built a small account, so it's very hard for me to say. Just in my opinion, you want to build that bankroll personally. Like I think that trading under PDT is very, very difficult, and I like applaud anyone who can actually do it because like for me to learn what I learned, it required a lot of mistakes and a lot of trading every day basically, and just learning how the market moves and what like level 2 and tape are kind of giving off and everything like that. So yeah, just good luck, honestly, to understand risk reward, and that should take you pretty far.
If you were going to start over and start from the beginning again, is that something that you wish you had known a little bit better?
If I had to start over again, I probably would have just not paper traded at all. Okay. And just got my ass kicked and learned like the real lessons, because if you lose like 5K in paper trade, like, oh, that was a black sheep event, that won't happen to me. And then you have no emotions. So it's kind of like, I learned from experience, really.
Interesting. Okay.
Yeah, that's great. So what's next for you? You mentioned you were working on longing a little bit and dipping your toes in that, but do you have any big plans for your trading or just your life going forward?
Just sticking to kind of the new rules I set for myself, wiring out, just paying myself consistently. I'm currently compounding my account back up to what I consider like the maximum threshold for liquidity. And then like once I achieve that point, I'm going to do something kind of interesting, I guess. This is like something that I've been theorizing. Like you compound it to the point where like you've grown your account. Now you have the bankroll, you have cushion. once you reach your like risk per trade that you're willing to accept, that works for you, like you just hold it there and then you trade that size consistently with knowing that you're 3-to-1s or whatever it is, your risk reward ratio. And that way, like you'll have a consistent climb, but it won't be as parabolic as before, but you'll have more consistency. And then when I lose, this is the special part. When I lose, I want to start compounding backwards. So like if I lose, I'm gonna reduce my size until I build it back up to that point and just like hit that wall. Once I like feel really comfortable there, then I want to size up and like let that compound keep going to the next level. But I want to take it really slow, just pay myself and not feel like very stressed about trading, like having to make a lot of money. Because if you make like a couple $100 or even $1,000 to $2,000 a day, you have a really good living, especially like for the amount of effort. I mean, we put a lot of effort, but for the amount of like hours that we put in, like working for ourselves. So it's really a blessing to trade, honestly. And I don't want to blow up my account and like not be able to trade. That would really suck.
Yeah, for sure. I mean, this has been awesome, man. Thanks for talking to us, and congratulations on your journey so far. And we look forward to, where you're going to be in the next year or two.
Thanks for having me. That was really fun. I had some friends on this podcast, and I thought it was really cool. So shout out to them. Can I give some shout out to my friends, my homies?
Yeah, go for it. Yeah, absolutely.
All right, shout out to Garrett Lucas. He's like the first trading buddy I ever made, and he changed the game for me. From there, we made a group with the bear. We stalked him on Twitter, and then eventually like had him join our group. And then some of his friends like Fobs, Leandro, AMG, and then we had some more friends like Binder, Raf, the short bear, not short bear, and then all the different people that I met on this journey, like Ricky, huge like amazing person. He'll answer any question that you ask him about fundamentals. I learned so much from him. Like ADF indirectly from Twitter. There's a lot of great follows, honestly, but those are the ones that kind of like stand out to me right now. And Harry, of course, I think he suggested having me on the show. So,
and any of those people, we'd love to absolutely have them on. So, put in the good word for us.
All right, Bryan, thank you very much. I think our listeners are going to learn a lot from this episode. I know Matt and I know I did. I'm assuming Matt did too.
I definitely did, man. A lot of good stuff.
All right, thanks for having me.